At what point are we going to see the real estate market finally crash like many have said or predicted? And what is going on with mortgage rates? They were elevated. They have increased recently. When are they finally going to start coming down? Today, I'm going to unpack exactly where we are on the market. It is now March 2024. And the year has started, I would say, in a very interesting way, meaning we ended 2023, which was a very difficult year for real estate. Obviously, we had very elevated interest rates. We had a major affordability problem last year. Many were concerned and scared about the market, assuming that maybe the market was going to crash. We're now into 2024. Since then, we've seen interest rates drop about 1%, but we've had a very interesting last 30 to 45 days, and I want to explain to you what's happening. So let's talk about interest rates a little bit. This really all comes down to the Fed, our Federal Reserve Chair, Jerome Powell, and how he talks about the economy. They are monitoring the economy, and the talk this year, where last year it was, when are these rates gonna finally plateau? This year it's gonna be, when is the Federal Reserve gonna start cutting interest rates? So mortgage rates are not tied to the Federal Reserve moving rates. However, they are indirectly tied. Now, so what's happening is the Federal Reserve is monitoring two major components with our economy right now. One is inflation. So their goal was to get inflation down to 2%, which was their target. We were at 8% at one point last year. So now we're in that kind of high 3 zone for inflation. So they're achieving what they want. Of course, it's not happening as fast as what we want. Now, the other major component that they're watching is our jobs market. What they look for, one of several factors, is the unemployment number. The reality is, as much as we all want interest rates to come down, we have such a major affordability problem with how expensive homes are with these high elevated interest rates. Now, as they look at our economy, it's proving that our economy is extremely resilient, meaning unemployment is almost at historical lows right now, meaning our job market is strong. So the one last thing that the Fed is looking for before they start cutting the federal funds rate is the jobs market. And until we start to see a little bit of pain, meaning unemployment rising, labor markets getting impacted, that's when we're going to start to see the Fed start cutting rates. Now, in January, they projected that March of this month that we'd start to see maybe our first cut. Some said maybe 3 cuts this year. Other economists were saying potentially 6 cuts this year. A cut is going to be a great thing for mortgage rates. But because of this unemployment number, because it's relatively low, or it's very low, not relatively, very low, and our job market is still really strong right now, we're not going to see them cut the rates. Now that projected target of that first cut went from March, now many people are saying the summertime. So of course I'll update you every month on what's happening. Now your average 30-year fixed mortgage right now in March of 2024 is around 7%, give or take about 0.25%. Now, of course, there are several loan programs in different scenarios that would give you a higher rate than that or potentially a lower rate than that. But your average 30-year fix is hovering in that low 7 range at this moment in time. Now, in January, it was in the high 6s for a period of time. So why has it gone up? Well, it comes out because they come out with these jobs reports every single month, and they keep coming out very strong. So the better our economy is doing, the worse it is for mortgage rates. So that's what's happening right now. I don't expect a big dip in interest rates in the near future, in the next month or so, but I'll be watching this stuff. We need to keep an eye on the Fed. The Fed met as recent as this week, and he basically said, our economy is strong. We don't see, can tell you a certain date of when we're going to start cutting it, but at this moment in time, we're just keeping an eye on it. So be patient, interest rates will come down. Let's talk about what's happening with real estate right now. It's interesting. There are a ton of people that are on the fence that either can't afford to get into a neighborhood that they want because of the higher interest rates, or on the flip side of that, there are a ton of buyers in the market right now that have come back in because interest rates have dropped over 1% since November. So for them, it made it more affordable. So it's a very interesting dichotomy. But the reality is we have an extremely low inventory level still, and I don't see that increasing dramatically in the near future. The challenge is as these interest rates are coming down, more buyers are coming back into the market. We have the biggest buyer pool in the history of real estate right now. And the last one was in the early 80s, and that group were the baby boomers. That was a 30-year run where real estate saw dramatic gains, and that was due to the baby boomers. They ran that run up of values going up. Now we have something very similar, but it's an even bigger group, and that group is the millennials. Millennials are coming back in. This is they're reaching their peak ages for home buying. So we're going to see a massive surge of buyers coming back into this market. So if you are a buyer in 2024, and whether you've been pre-approved or you think you're going to buy, my advice to you is get your ducks in a row, get a plan in place. I'm already seeing right now with our buyers that are active in this market in the first quarter, multiple offers on almost every single house that we're making offers on. Why is that? There's very few homes available for sale, and there's a lot of buyers coming back into the market. The result of just simple supply and demand is home values are going to continue to go up. Now, last year, all the numbers came out from all the major sources. Pretty much on average last year, homes went up about 5 to 6%. National, like a normal market, is about 4%. So it exceeded that. And remember, rates were at almost 7.5%. They were at 8% at one point during the end of the year, and home values still went up in value. So just think about what's going to happen this year as interest rates do come down eventually, and all these buyers come back into the market, and they're all competing for very few homes available for sale. Home values are going to increase. Now, some of the major sources that we watch that predict what they think home values are going to do this year, they start the year pretty conservative. Many are saying kind of 1% to 2 to 3%, kind of in that range. But we'll see what happens. I think the interest rates coming down is going to be a huge indicator and huge component to what's happening with home values. But at this early in the stage, we are seeing home values increase this year. So if you were one of those, or you're watching someone that's telling you the market is going to crash, you are hearing it from me, and this is by no means a way to push you into buying. Home values are not coming down. The market is not crashing. It's impossible based on the amount of homes that are available for sale. Let's put it to perspective. There's about 350 to 400,000 homes available in the entire United States. In 2007 and 8, when we saw the crash, there were 2.7 million homes available for sale. But back then, there were 30 million less people in population. So now add 30 million people to the population, and only about 400,000 homes available for sale right now. There's just, the recipe is impossible for a crash to happen because of the amount of demand. Anyway, that's my market update for March of 2024. If you like this information, if you find it helpful, or if you know someone that is in the market, subscribe, like, comment. Do you agree with me? Do you think I'm right? Do you think I'm wrong? Let's create a conversation around this, and I will send you another update in April next month. We'll talk to you soon.